Hello and welcome to the world of electronics and manufacturing industry. This is Garima Saxena from Group 3, SPJCM November 2010 batch, presenting to you the analysis of Venture Corporation Limited of Electronics and Manufacturing Industry, Singapore. Before I start, let me introduce my team members, Ravi Chandra, Shiva, Sudha, Kumar and Prajakta. Singapore is one of the 4 Asian tigers which has emerged as a rapidly growing sound economy in Southeast Asia. The World Bank rated Singapore as the 3rd best country for doing business and trade. Singapore was also ranked first for being the least bureaucratic and corruption-free place for doing business in Asia. The booming manufacturing and high technology sectors for this tiny island nation defies its size, thanks mainly to its industrious population and its strategic location on major sea routes. No wonder international trade associations are on the rise in Singapore. Now let's have the industry perspective. The electronics and manufacturing industry is the backbone of Singapore's economy. Electronics is a major industry underpinning Singapore's economic growth and contributes 30.6% of the city-state's manufacturing value analysis. Electronics accounted for almost 41.5% of the total investments in the 2009. Employing more than 90,000 workers, Singapore's manufacturing industry contributed to about a quarter of the nation's gross domestic product and employed approximately 21% of its workforce. Venture Corporation Limited is a high-tech design and manufacture firm based in Singapore. The company is involved in complex circuit boards and complex fiber optic equipment. Venture is a listed component of the Straits Times Index. The group has built know-how and intellectual property with domain expertise in the following 5 broad segments: test and measurement, medical and others, networking and communication, computer peripheral and data storage, retail store solution, industrial products, printing and imaging. The capabilities of venture technologies can be categorized into engineering capabilities and electronics and manufacturing services.
Hi, this is Shiva. Till now, Garima has explained about the electronics and manufacturing industry and Venture Corporation Limited as a group. Now, let us take a look at the financial statements. Starting with the balance sheet. The total assets for the year 2008 was 2,916 million, and for the year 2009, it slightly reduced to 2,744 million. The total equity was 1898 million in 2008 and 1865 million in 2009. The total liabilities accounted to be 1017 million in 2008 and 878 million in 2009. The debt equity ratio is calculated to be 0.54 in 2008 and 0.47 in 2009, which clearly says that the capital raised by debt is almost 50% of that raised by equity in both the years. Now here comes the comprehensive income statement of Venture Corporation Limited. The major income in 2008 was through revenue and interest, and it amounted to 3,800 million, and in 2009 it amounted to 3,420 million. The major expenses were in the form of employee benefit expenses, raw materials and consumables, ongoing research and development, other operating expenses, depreciations, and so on. Earnings before tax in 2008 were 172 million, and in 2009 it reduced to 140 million. The profit in 2008 was 167 million, and in 2009 it reduced to 143 million, a decrease of around 14% in the profit. The comprehensive income in 2008 was around 142 million, and it reduced to 102 million in 2009, amounting to a reduction of 28%. The basic and diluted earnings per share in 2008 were 60.8, and in 2009 it reduced to 50.4. Thus, we see that the overall profitability of Venture Corporation in 2009 reduced as compared to that in 2008. Coming to the most important aspect of financial statement, the cash flow statement. The cash flows can be divided into three sections. 1. CFO, that is cash from operations. 2. CFF, that is cash from financing. And 3. CFI, that is cash from investments. Let me walk you through the key aspect of the cash flow statement and the primary investing, financing and operating decisions of Venture Corporation Limited. Starting with CFI. In 2009, the net CFI was 33.68 million. In 2008, the net CFI was 8.25 million. In 2008, the divestment was comparatively more as against that in 2009. Investments in 2008 were around 53 million. In 2009, they were around 70 million. From the above statements, we can derive the following investment decisions taken in 2008 and 2009 by Venture Corporation Limited. 2008. The primary investment decision by Venture Technologies was on purchase of plant, property and equipment. Other supplementary investment decisions included investments into intangible assets, available for sale investments, and acquisition of shareholdings in an associate. Cash flow was facilitated through proceeds from disposal of available for sale investments. In the year 2009, primary investment decision was again to purchase PPE and intangible goods. Investment in PPE decreased by 50% and that in intangible goods increased 4 times. Other key investment decision was in the form of extension of debt of 17 million and purchase of available for sale investments. Cash flow was primarily through sale of investments and disposal of PPE. The cash flow from financing. In 2009, the net CFF was 236.717 million, and in 2008, the net CFF was 326.09 million. Cash inflow was more in 2009 as against that in 2008. Finance capital raised was around 100 million in 2009 and $11 million in 2008. The financing decisions derived based on the statements given. In 2008, the primary financing decision by Venture Technologies was to raise capital through debt of $11 million bank loans. Cash outflow was in the form of dividends paid, that is 137.127 million, and the repayment of loans was 199.970 million. In the year 2009, the primary financing decision by Venture Technologies was again to raise capital through debt of 100 million bank loans. Cash outflow was in the form of dividends paid, which is 137.127 million, and repayment of loans, which is 201.311 million. The last is the cash flow from operations. In 2009, the net CFO was 339.382 million, and in 2008, the net CFO was 358.335 million. In 2009, revenue was 3412.511 million, whereas in 2008, it was 3784.120 million. The sales have decreased in 2009 compared to 2008. Operating expenses have decreased in 2009 compared to 2008. Employee benefit expenses, raw materials and consumables, ongoing research and development, and other operating expenses were more in 2008 as against in 2009. The net increase in cash reserves at the end of the year 2009 was 68 million, which is thrice that of the year 2008, which was 23 million. Finally, to give an overall summary of Venture Corporation Limited financial statements, the financial events of 2008 continued to impact the electronics and manufacturing industry. The revenues and profits have declined from 2007 to 2009. The group ended the year 2009 with a healthy balance sheet considering the overall industry scenario. Thank you.